Okay, so next session is crypto's finding its way into traditional multi-asset portfolios. Actually, I think this title came from you or from Edo. So yeah, thank you for for the idea. So welcome back after lunch. I hope you are feeling a bit better. And please, the stage is yours.
Great. Yeah. So now we have the very. Great. So yeah, welcome and thanks that you're all here. I think it's a really tough task to have the panel after lunch, right? I hope you all had some great lunch. Yeah. So this is a panel which is about crypto investing, and also we talked about institutional crypto adoption in also one of the previous panels. So we basically will also build on what has been said there. And to kind of set the scene, I think currently 3 main developments are seen in the crypto space. The first one is about retail investors. Like more and more investors go into the space. We've seen numbers for the US in the Biden's executive order with like 16% of all American adults investing into crypto. And for the euro area, according to ECB data, like 10%. And I think that's really a lot. Maybe when the blockchain convention started, some people said it's still a niche topic, right? But I think also this event shows that it's not that niche anymore. It's the first. The second, we also do see in an institutional context that it's get more and more tractions, right? So traditional payment service provider go into crypto, buy startups, offer services. And the third, and I think this is like kind of the negative, is like, let's say crypto winter, or in the morning we had the term crypto hurricane, because it's something which maybe goes away earlier, who knows, we don't know. But on the short term, of course, this seems to be kind of negative. But we've also discussed previously in other panels that maybe this is positive, on a long run at least. So this is just important to set the scene. But if we go directly into the topic, I would like to basically get the stage to you. So welcome Maurice, Kelly, Georgi, and Leslie. And yeah, let's just start with a quick introductory round. So maybe we start with you, Maurice, first.
Yes, no problem. Thank you. My name is Maurice Mureau. I'm the CEO of Hodl, and Hodl is an investment firm in cryptocurrency. We offer retail investors, family offices, and institutions access to cryptocurrencies in a diversified portfolio. I have a background in traditional finance, and I saw the light somewhere in 2019. And we're based in the Netherlands, but we're also opening funds in Spain, Luxembourg, Swiss at the moment.
Hi guys, I'm Kelly Pettersen. I'm on the institutional sales and trading team at Coinbase Institutional, based in London, covering the EMEA market, looking after the Spanish market, the Middle East, and a variety of other client segments. I started off my career in banking in New York, moved to the UK with an investment bank, moved into crypto in 2018. Was building a few different fintech crypto institutional focused startups. And one got bought by Coinbase last year, and is one of the fundamental premises of the Coinbase Prime Brokerage platform for trading and analytics.
Hi guys, my name is Georgi Ivano. I'm a Vice President of Risk, Strategy and Trading Operations at Nexo. I have a traditional financial institutions / banking background going on 20 years. But in addition to that, I built my own mining rig in 2013 and got involved with crypto at about that time.
Thanks. Hello, I'm Leslie. I'm from BD.com. I'm at the head of BD. Actually, I'm not just providing service for selling or different sales activities, but I also provide the new products, new service in our company. And actually, I joined the industry for 4 years. I mainly serve clients also in Asia, so that we can have some more communications. And just ask me if you want to know something in Asia, and I'll tell you. Thanks.
Yeah, thank you very much. I think that's a very interesting lineup. And yeah, I have the pleasure to moderate the panel. So I'm Jonas. I'm currently chairman of the Digital Euro Association and head of digital assets and currencies at Itonic. And now we have a very good introduction round. So let's start with, I think, a very basic question. I think you get these questions probably all day long, let's say. What are the reasons to invest in crypto? Or put differently, which assets do crypto assets have that other assets maybe don't? And this is a question to all of you.
I can start. I think it's very important if you look at how the world globalized over the last decades. And if you can see that we're doing business all over the world via internet, we also need something that does payments and other stuff on the internet. So that's the basis. If you look at the technology, there's so much possible within cryptocurrencies, and you can see that the need and the trustlessness, the borderlessness, and any other frictionless aspects of the crypto are really interesting. And if you look at the broader perspective of a portfolio, and you look at the other assets, it's getting more difficult. So in the old days when I was in the traditional finance, I always said cash is king. But yeah, with 10% inflation at some point, I think we're in all the Western countries between 7 and double digits. It's hard to have your bank account, look at it and see it sort of become less over the years. So you need alternatives. And if you look at the alternatives, there aren't many at this point. Bonds is a no-go area because the interest rates are going up. I think stocks are quite overpriced. I don't know how many Teslas we need to sell to get that price, the price earnings level at some point. But real estate is difficult, so there's not a lot out there. And if you see something that is technically advanced, still early days, and very interested in the perspective of the youth, which is our future, that makes sense that it should be part of your portfolio. How much? We will discuss that later.
For sure.
I think I can take maybe a little bit of like a different angle to it. Paul Tudor Jones, who a lot of you guys probably know of, put together a white paper back in 2020 in May, and he titled it The Great Monetary Inflation, and it basically looked at Bitcoin as a proxy for other crypto assets, but how Bitcoin compared to financial assets and gold, for example. And basically he compared Bitcoin, as potentially a store of value when it comes to an inflation hedge. And I know this story has maybe changed a little bit in terms of inflation, but he looked at it against 4 key kind of criteria areas, and one was trustworthiness, one was liquidity, one was portability, and one was purchasing power. And he did kind of a bit of a methodology wrapped around that. And while Bitcoin came in last amongst kind of this comparison to other assets, it's really interesting, I think, because Bitcoin, the market cap of Bitcoin is super, super small, like relative to gold or financial assets or other assets you might include in a portfolio. So Bitcoin actually is only, the market cap is like 1/1200th, I think, versus like financial assets market cap generally, or 1/60th of gold's financial market cap in general. So I think, when you look at that, it makes like a really interesting use case to say, Bitcoin or Bitcoin as a proxy for other crypto assets could potentially be looked at as a strong potential as part of a portfolio. And even though maybe the inflation story has changed, Bitcoin or other cryptocurrencies, especially Bitcoin, has been a top performer, I think, through and through. And we've seen, compounded annual growth rates of over 200%. I think it outperformed gold by 100x over the last 10 years. So I think, kind of coming at it from building on what you said from a different angle, I think that's a really interesting kind of white paper to look at and to think about from a very serious, hedge fund player in the market.
So to me, in addition to all the features of crypto that were mentioned that were compelling, another feature is the fact that currently crypto markets trade 24/7, 365, no weekends, no national holidays, and what have you. True price and risk discovery in real time, around the clock, year round. And that to me is compelling. And yes, the market is down. Crypto is part of the junior part of the credit stack, the junior part of capital stack, and it gets punished heavily during periods of volatility, market volatility. But in the grand scheme of things, if you have a long-term view at the market, and if you look at the credit crisis and what some of the high-yield bonds and what the CLOs did subsequently, if you have a longer-term view of your portfolio and your investment strategy, I would argue that you need to scale into crypto exactly the time when everyone else is selling.
Okay. For actually, I believe that most of people work for crypto or join crypto for a long time, and you get the answer already why we should put portfolio in crypto, right? Because the yield and fancy, right? But for the newcomers, I would think that because for traditional, it was talking about commodities, stocks, funds, right? And crypto is another new things. Why don't you try something new, right? And you will put a portfolio into separate things, and actually, more and more people join crypto and more people thinking about in metaverse, in digital world, we can divide the reality and crypto in two worlds. And we can do some arbitrage between the real world and in the crypto. Why don't we do so? So I think it is not talking about yes or no, but talking about how much you should put in crypto so that you can earn more things. And on the other hand, like trading strategies, we have to know what kind of chances that you should do. And if you join crypto, you get more chances. So why not, right?
Yeah. So lots of different advantages and quite bullishness, I would say, in this panel. So about real-time payments, 24/7 payments, worldwide payments, and also the potential inflation hedge, maybe, let's say. Another question we often have, right, is the question, okay, I want to go into crypto, but in which one, right? And of course, it's now important to say it's no investment advice, so a standard disclaimer applies. But how would you select suitable crypto tokens you would invest in? What your categories, let's say?
Go ahead.
You're going to take first?
Your call.
Well, obviously Kelly has the on-ramp, so. But there's different ways to go into crypto. I think everybody knows that here. Most start just with a broker and an exchange, which is your first Bitcoin buy, probably. And from there on, you look further. And as you said, it's no investment advice, but there are so many cryptos out there, you need to do your research. That's the start. But it's not only about selecting the right coins due to the research, but it's also how do you keep them safe? How do you make sure you're doing the right stuff? And how do you make sure that you keep tracking the markets and are not surprised if anything happens to a coin that you saw that did something else than it actually does? So there's multiple ways to get into crypto. I think the first one is just buy it yourself. If you go more professionally, you look for professional parties, centralized parties that will do it for you, that hold your cryptos, etc. One of the on-ramps I personally also use is Coinbase. So I think Kelly could explain why this is a good idea.
Yeah, sure. I think, in terms of not giving investment advice, we need to be really careful there. But I think a lot of people look at crypto as a starting point by looking at market cap. You can really kind of consider maybe market cap as a proxy for the value that crypto, that crypto or that crypto, economy around it has derived and the potential future of the value that it will accrue over time. I think market cap, though, is maybe potentially super simplistic, and I think we've seen that potentially blow up in terms of the $40 billion event we saw a few weeks back with the whole Terra Luna algorithmic stablecoin situation. I think there's other ways to think about crypto in terms of thematic investments, so you can look at metaverse or gaming or L1s or L2s. You could overlay that with market cap. You could think about a lot of different ways, I think, to access the asset class. I think in terms of maybe easier ways to kind of get into crypto, at Coinbase, we work with a lot of institutional partners and clients, and they basically use Coinbase Prime Brokerage, where they can basically kind of get access to a one-stop shop between trade execution by getting access to multiple liquidity providers, plus trade financing, lending, borrowing, and custody, staking, the list goes on. A lot of these institutions, I think, start as a phase one, looking at crypto basically as a speculative asset to trade, to get, to maybe make a quick profit off of. And then as a phase two, they really start thinking about, okay, how is this asset class and potentially the blockchain as well going to disrupt our business model? How are we going to kind of diversify into new revenue streams? That's what we're starting to see today in terms of how clients are thinking about accessing crypto and testing crypto. Obviously, with the reprice as well in the market, maybe there's a nice opportunity for some of these firms to come in and play around. Adding on that, though, I think if you don't want to directly invest in crypto, we are seeing other ways that institutional investors might come into crypto. They may get exposure through like an ETF or an ETP. You don't have to then custody the crypto asset. Maybe you get exposure to a basket of assets of crypto companies or blockchain-based companies. You may buy TC or ETHE, which is Grayscale's trust. That can be another interesting way to get exposure. Maybe you get exposure through a hedge fund. Maybe you buy Coinbase's, stock share, or a coin, I guess, is the ticker, or some other kind of crypto public or blockchain kind of public companies to get some indirect exposure. So I think there's a lot of different ways to kind of tap into the market depending on your risk appetite and depending where you are in the stage of your journey.
And I'll approach this question from a slightly different, angle. From an institutional money allocation standpoint, you need to look at an asset class that has the track record for you to backtest your thesis and your portfolio strategy, right? And so if we look at the inclusion potentially of a crypto asset as an alternative asset class to a traditional portfolio, you have to basically have enough data to do your backtesting and look at your, risk-return correlations. So in that context, all else being equal, I'm not a Bitcoin maxi per se, but I would say really, if you look at the track record, we have maybe Ethereum and Bitcoin, probably Bitcoin, with sufficient history here, live market data and volume data to give you that level of comfort in terms of making your portfolio allocation decisions. As far as the others, I think time will tell, and we're certainly going through a cycle here where we're going to see who's swimming naked, right? Everybody's using this saying these days, but I think that will be one way to allocate into a Bitcoin allocation as an alternative asset class. In terms of selecting the right vehicle, this is my opportunity for a shameless plug. Nexo rolled out about 2 months ago our prime brokerage tool, which uses smart order routing. And what that really does, we're very proud of this capability. We basically look across 20 different exchanges in the market to route large orders depending on the liquidity conditions at each one of these exchanges, which is a tremendous advantage if you think about in a highly volatile market environment where liquidity is something that determines the execution efficiency of your order. And so I'm touting this because if you're an institutional investor that would like to get the most, the optimal execution, in a very difficult market, potentially this is the way you want to go.
From my point of view, I don't suggest to buy specific tokens or what. I really suggest that we should buy with strategies and trade with strategies, how to hedge, because in different market situations, there will be different chances. Like in the bull market, I think holding Bitcoin is of course a good try, right? But in the bear market, I think we should do more option trading because like buying put, it would be another insurance and to hold the price. And this is what actually Bit.com is offering because we have provide different derivatives like perpetuals and also options trading. And especially right now, there are more and more trading strategies in the market, and many trading teams, wherever they are located in Europe and in Asia, they also do different arbitrage. So I would suggest that for newcomer, we should join the market by buying funds first, because professional things and it should be done by professionals, right? And we can choose products over there, and especially when you choose any funds, you will have to check several data, as mentioned, like the NAV and also drawdowns and also the AUM that they are holding and what strategy. We have to make sure that don't be cheated because there's so many fakers in the market. So we have to ask some professional like all the guests here, since then you can give some advice. Thanks.
Yeah, let's now also for some part of the discussion focus on like the impact of like the recent crash we have seen, right? And Kelly, you were also saying about or telling about this initial narrative we have or had about Bitcoin, for example, being a version of digital gold, so like an inflation hedge, which is I personally still believe in this story, but also the crash. Often people say, yeah, is this narrative now over? So it would be, as you brought it up, Kelly, be interested in your view. Like, do you think it's like maybe not just there yet, right? Because we just have like 15 years of track record, or do you think it's just proven wrong of this narrative?
I think this kind of like brings me a little bit to the like allocation question, I think, around like how much do you actually allocate, and you'll see why when I explain. I think, there's tons of models out there and portfolio modeling tools that talk about like how much should you allocate, and there's been a number of them that have been focused on Bitcoin for various reasons, and I think what I talk about next will kind of play into kind of answering your question. There's two companies out there that I've been looking at a bit more around how they've done their portfolio modeling. One is Bitwise, it's a crypto asset manager, and one is Man Group, who I'm sure most of you know, it's a very large hedge fund. Bitwise actually put together a study that looks at allocating from like a traditional portfolio, 70-30 split, looks at allocating 1%, 2.5%, or 5% of crypto to the portfolio and kind of what that looks like over the course of a number of years. And basically the Sharpe ratio increases by 2x. And I think that says a lot. And Man Group's study actually is very much correlated to the same result. It's actually a 2.3 Sharpe ratio. Of course, to your point, there's max drawdown profiles, et cetera. But I think there's still a really strong case with 5% of BTC today over the course of a 10-year time period or a longer-term time period as a more passive investor to make that case. Whether to invest right now in BTC or in ETH or others, I don't know. Well, that will be, foreseen, I guess. But I do think it makes a really strong case, despite just this inflation hedge. I think actually looking at like the fundamentals, the way the portfolio is modeled, the quantitative modeling that they do, I think it does prove out, not just from crypto native asset managers, but also from one of the largest hedge funds in the world.
So we have 1 until 5%, like in the room as a number, as a fraction, which couldn't be bad to have a portfolio in crypto. Like what would the others say? Like similar span?
So as you said, I don't provide investment advice. I'm not an investment manager or what have you. So standard disclaimer here. I would answer it this way. If you're a portfolio manager and you have your thesis and your long-term view of your investment strategy, you should not be picking tops and bottoms, right? You should not be timing the market. And, maybe you would think after the recent sell-off that this is a good entry point, but maybe it is not. My point is, if you're scaling into a portfolio strategy, you're looking at the long-term horizon, and you should have the conviction to basically sustain your portfolio strategy, including the volatility in P&L that comes in the interim periods. Crypto is very volatile. I mean, there have been periods where we've gone down 10 standard deviations, looking back the last couple of months. And certainly we've seen plenty of cases where crypto has swung right back with 10 standard deviation upsides. And all I can say is going back to the credit crisis, the portfolio managers that basically allocated at the bottom of the cycle, regardless of whether or not they picked the timing right, really were very happy in the subsequent years.
Yeah, if you look at it from a correlation perspective as well, when I started in 2019, people were telling it's uncorrelated. It doesn't correlate with anything, and then they're talking about Bitcoin. And that shifted, so it became a risk asset for institutions. You see parallels with NASDAQ stocks, but you never hear somebody talk about the correlation between high yield bonds and tech stocks, which is there as well, obviously. So it's just a risk perspective. And I think you could see it in the end of 2019 when the first institutional adoption was talked about, and there was that bull run 2020. And then end of the quarter, so April 2021, you saw a decline in the markets. And I think a vast part of that was that just rebalancing. So a lot of institutions went in and said, okay, I want 1, 2, maybe 3% in Bitcoin. Bitcoin doubled or almost doubled in that period. So they just, end of the quarter, is just rebalancing. It's okay, this is now 6% of my portfolio. It's too much, I just need to sell a bit. And I think that's how they look at it, just from the risk perspective. Is it risk on, you would see that definitely the cryptocurrency will go faster up than all the other assets. If it's risk off, like it's now, we're in a, what do you call, bear market. And bear markets in cryptos are difficult because what's a bear market? An official bear market is a 20% decline. Well, in crypto, that's a week. So we've go from bear to bull to bear to bull if we measure it like that. But if you look at just the general inflow from institutions and when are they buying, when are they selling, they're interested. They definitely want to go in. What the entry point is and what the exact percentage is, we'll never know. But they will set a percentage somewhere, I think, between 1 and 5 to begin with. Maybe later on, when it's a more mature market, it will up a bit. But then the volatility will go down as well. So I think it all has to do with the risk.
From my point of view, I think it's not talking about how much allocation or what you think, but on the other hand, what kind of risk control or what kind of risk they can bear, because during business moments, there are so many big whales get crashed. The common factor that they have is they haven't done a very good risk control. Even though they have very good background, they have many good team members in their companies, and they really make a lot of money in the past few years. But on the other hand, they haven't done a very sophisticated risk control to that make them have in the bad situations. So for I think, whatever how much you can do, risk control is the first thing you have to bear in mind. And on the other hand, the more risk you can get more profits. So in the balance, you have to choose. And whatever is person or in institutions, like the people in Yang, then just go and all in, right? And if you think it is just part of my portfolio, then you can still about that. So it's not depending on how risky it is, but what kind of risk control you can do.
Yeah, I think that's really important, right? Also, the time horizon matters. If it's like me or us investing, or like people that like retire in 2 years and allocate parts of their portfolio into crypto. You mentioned, Maurice, again, the bear market, and I would like just to talk about this because I think that's the topic that we currently have, and we also have it at one of the logo here, right? Now it's time to build in this bear market. And for me, the question would be, what do you think? How does this affect institutional investors? Because we have seen that lots of institutional investors have gone into the crypto game. They are still, I guess, a lot to come. But what does it mean for them? Like, do you think some of them will now like kind of stop their projects, or say, oh, now it's like cheap, so if I get my clients using Bitcoin, now it's a great time? What would your guess be?
They're definitely still very interested. Also, most institutions represent clients behind them. So that means if the clients demands of us for a product, they will definitely look into it. And they also see there's a lot to gain on the profit side, obviously, with the volatility. I think the main blocker at this point is the waiting for the regulation. So where you see that, for example, in Europe, we're still, I think, 2 years away from a regulatory perspective. And if you want to regulate now in one European country, then that's fine. But if you go to the next European country, you have to do it again and again and again. So it's a bit awkward because we're saying we're one European Union and then you don't have a regulatory perspective. It's coming, but it will take time. I think the US is a bit faster. I think it will be there within a year from now. Probably it will be outlined. And that means that the traditional institutions get more handles to be in a sort of a trusted social environment to invest, and that's what they need. And what was also mentioned in the last panel, they need professional parties, they need full service, they need to have risk models attached to it, they have to have all the things they have in their other assets. But it's not a question if, it's more the question when, and if you say if they're still interested now, yes. I don't think they look at the market swings for interest, they just look at it, is it an asset I can sort of in a safe way put into my portfolio?
I have to agree. I probably don't have too much more to add. I think the institutional demand that we have seen over the last year hasn't kind of, depreciated during kind of the last 3 to 6 months. I think we've continued to see all of the clients we're currently working with completely committed to the asset class. I think, and also a lot of new clients coming in still. I think it's relatively kept the pace with the last year for us. I think a lot of institutional clients are committed long-term to like a much broader crypto strategy or blockchain strategy or Web3 strategy. And I think they know, given they have a lot to learn and test from crypto as an asset, that the opportunities, I think, really lie ahead. And I think a lot of financial or institutional investors also have been through various down cycles in TradFi, and I don't think they're looking at a nascent market that maybe has growing pains or challenges with regulation, which will always be the case. Innovation is always going to precede regulation. People understand, I think, that dynamic, and I don't think they're kind of faltering in their commitment to the market overall, and that's kind of what we're seeing on the desk at Coinbase.
Not much to add on this one, other to maybe basically say that in a bear market, and it ties to what I previously said, in the risk-off regime, all the capital, all investors basically fly to safety, right? So in terms of the appetite across the board for the junior part of the capital stack, stocks, high-yield bonds, crypto, all of those asset classes have seen tremendous volatility in the last couple of weeks and months, what have you. But ultimately, I'd like to think the smart money actually sees the long-term value proposition. Blockchain is here to stay. Just looking at how many people are here and all the businesses and the companies that are building, everything around crypto and blockchain is really actually exciting. So I think with a long-term view, I would like to think that, this is the time you want to scale in. If you have an appetite opportunistically to invest in an alternative asset class, you want to get into crypto now at times like these.
That would have actually been the great closing word, but we still have time, so we obviously don't close. And maybe one additional question to you, Leslie, or do you want to comment on?
Maybe let me continue the question first, all right? Because what I think about institutions, actually they will invest in either private markets or secondary markets. For private markets, actually quite a lot of projects valuation is dropping down. And even the valuation for Series B or C is lower than their Series A. So it's a very good timing for them to go shopping right now. So actually, quite a lot of prime investors, they are waiting for this moment. So actually, they are coming. Okay. For secondary markets, like different trading teams or trading firms, actually, the trading strategy has to be changed. There's no one unique trading strategy can survive in bear and bull, right? So during this moment, actually, they are still working hard and improving their strategies and see what's going on and what can we trade next. So actually, it really should the slogan, in bear market we build. So for either prime markets or secondary markets, we all coming in and doing something new. So I think it's not a bad moment, but on the other hand, it's preparation for the next bull market.
Great, yeah, so thank you very much. I think we have 10 more minutes, which is good, and we also got like 5 minutes on top, like in the beginning. So now we would use this 10 minutes also to give the stage to you guys. So we haven't had a lot of questions, or haven't had enough time this morning for questions. So now you have the opportunity to ask some questions to the panelists. So maybe we have a mic for the audience. We could pass, and I'm not seeing anybody, so maybe a person could go around and pick the people with questions.
There's a mic on the last chair.
We can't see you, so if you have a question, just shout out. Somebody in the middle up, halfway up.
Yeah, we can't see.
Thank you for the presentation. So I'm Ali Kassab, chairman of Centurion, a regulated crypto exchange in Estonia. My question is a little bit straightforward. How do you protect your investors from the kind of crash that happened against Luna, for example, which is something that everybody is asking? How come a big fund like Luna, which has a $40 billion market cap, could still go to zero in, let's say, a protected market and supported market by so many big investors and institutions like MicroStrategy, Grayscale, Elon Musk, etc.? What have you done to protect your investors in this situation?
It's kind of three questions in one, but I will start with the first one. So Luna, an algorithmic stablecoin, I think that was just presented as a stablecoin, which it wasn't. That was on the last panel as well. If you did your research and you think an 80 to 20% yield is not sustainable, there is a vast risk on it on the collateral. In this case, it's an algorithm, and somebody sort of breached the algorithm and said, okay, this is not working, I'm going against it, and they broke it. why did it went up to $40 billion? It's probably most of the people that invested in it didn't understand in which product they were invested. So there was a stablecoin panel already. It was explained very well. I think it wasn't a stablecoin, it's just marketed as a stablecoin and people didn't do their research. So that's one.
Yes, maybe I can add on, because actually it is not talking about how we, our institutions can protect the users, but on the other hand, for the traders, they have to know for every trading, they have to hedge their positions instead of just holding. Because if it's holding, then why you have to put all the eggs in the one basket, right? So we should also allocate our assets, even tokens, in order to diversify our risk. So it's not talking about a platform, but on the other hand, it's talking about your risk control. So this is, I think, these are my suggestions.
To add to this answer, actually, so in a nutshell, the answer is you have to manage your liquidity very carefully at the top of the bull cycle in order to anticipate the bear cycle. So, you want to have a balance sheet that is basically, that can react and you're protected from a risk management standpoint if certain liquidations begin, right? For Nexo, for example, our loans are algorithmic, the loan to value is algorithmically, controlled and maintained, much like a margin, basically, loan on an exchange. So we're very, very good at managing that risk. Risk management is critical, being able to manage your liquidity by not over-levering when it's easy to do so at the top of the cycle is another way to ensure that you don't get into trouble.
Yeah, so the other party you mentioned was MicroStrategy. I think that's a whole different story because he just turned his company into a Bitcoin ETF. And I think that's a risk that's very obvious. I mean, you either take a position or not. But that just goes along with the Bitcoin price.
Yeah, let's go for another question. Yeah.
No. If just I wanted to add something. I mean, Nexo freezed withdrawal at a certain time after the collapse of Luna or in the past recession.
I don't think we actually did. And if you are...
What happened, I mean, I saw a lot of exchanges or financial institution freezing withdrawal. We talk about decentralized finance, and at the same time, Luna was a decentralized stable token with a huge collateral on Bitcoins. And we found that this is something like very sad for the crypto community and blockchain. What happened to Luna, I mean, or other financial institutions. So we saw Babel Finance, Celsius, etc., and we can name it. So the question is, we are talking here about the future of finance. What we can do to protect the future of finance and investors from this kind of manipulation. This is a big question because you are part of the leaders and innovators in this field. So I think there is a big question mark to ask ourselves here after, I mean, we saw the crypto moving from 2017 and going through a lot of volatility. But at a certain time, if you look at the investors who are coming into this field, we should avoid them this kind of big volatility that can make them just disgusted from this field.
Specifically to your comment about Nexo, the crypto market is still in its nascent stages, right? We're very small compared to a $40 trillion equity market, compared to a $140 trillion bond market. In it, capital inflows and outflows make our asset class very volatile. But that's an opportunity. If you're a day trader, it's a good thing and a bad thing, right? And that's a separate question. Specifically about redemptions and withdrawals, Nexo at no time has suspended any of these things. Our competitors might have done that, but I can tell you for a fact that we did not. Specifically with regards to Luna, in the event that the market had a dislocation or an event where price discovery might have been hampered, we might have put a pause on these redemptions specifically with regards to Luna. But that is in the interest of protecting our account holders. We have over 3 million account holders we have to worry about.
Okay, so let's come to a last question.
Yeah. It's working? Oh, all right. So yeah, my question is about, or more like a thing I just wanted to know about, like, how do you guys see like the structured products, what we call in DeFi, like DeFi option vaults, like DOVs? How do you see those products evolving through like different sorts of markets? Like how Leslie was mentioning, you need to just maintain your risk. It doesn't matter what sort of a market is it. So I just want to know, like, could you like numbers that you're looking at in terms of like traditional finance coming into those crypto products through structured products? Exactly. Yeah. Thank you.
Yeah, so maybe to Leslie, and maybe you can respond quickly because we just have 1 minute left.
No. Actually, I know quite a lot of big names is coming. It's already in the markets. I don't mention the name right here, but I can tell you that really quite a lot of big names already coming. And for DeFi options or whatever CeFi options, I think it's all talking about hedging. And for every structural product, you have to do the hedging and whatever the price, because, in the markets, the Bitcoin is coming from mining machines. And they need to hedge with buy options in order to lock their profits. So option trading is really, really good products and for them. And for other holders, especially because it's a symbol of our industry, they also want to hold. Right. So what I think is whatever is the product is underlying is talking about DeFi or CeFi. I don't care about it. I'm just talking about how they hedge, and whatever is a perpetual futures to spot or options and to spot also fine. But it's not that easy. So we have to work with some professional teams and a good platform, of course, like Bit.com, and in order to do all the settlements,
I wanted to just add lastly to that, I'm not a structured product specialist, but at Coinbase we recently have created a team called CRS. It's called Coinbase Risk Strategies, and this is exactly what they're looking at. So it's still in the infancy, but we're spending a lot of time with clients that are a little bit more crypto savvy and a bit more open to kind of structuring products with us, and we're working on various ways to create structured notes or give them access to various DeFi, lending strategies, for example, or running, different models on the basis trade to give them exposure to risk. And we're doing that in a way where we'll take a percentage of that risk, and they'll take on a higher percentage of that risk and probably more of the downside risk than we will. But it's very much kind of early stage, and we're structuring it based on kind of a very high touch, white glove approach, one-to-one with the client right now. And we're getting those learnings with kind of friends and family, larger institutions to be able to continue to build on exactly what you asked.
Great. Yeah, so thank you very much, Maurice, Kelly, Georgi, and Leslie, for these great insights. Really thank you very much. Also, thank you for your great question. That was the panel. And yeah, enjoy the next one.